I'm Michael Sabo, Senior Commodities Broker with RJO Futures, coming to you here from the floor of the CME Group with some commentary here in the oil market. So let's get started here right now. You've got July crude prices here under a little bit of pressure here, trading around the 93.50 area. And if you recall from some of the prior posts here, that 200-day moving average keeping up here right around the 94 area. Today we've been, so far on both sides of this market, above 94, below 94. But certainly keeping a little bit of a weaker tone here. And something I want to talk about here is the EIA data that just came out. And, traders were looking for a draw of about 750,000 barrels. And we actually came in with a surprise draw of around 6.2 million barrels. So substantially larger draw. And yet, if you take a look at the price of oil here, it hasn't had much of a positive impact. Overnight activity here, market was already up about 30 plus cents. And then what we've seen here is the market kind of push on up through there here and then kind of back off, and certainly keeping a little bit of a weaker tone here. And I think that when we take a look a little deeper into that EIA report here, and you look at the current stocks here, which are currently around about 391 million barrels here, that's still a record high. The last record high that we saw for this time this year here was around 385 million barrels, which was back in 1990. Capacity utilization rate up about 2% here. So we are seeing refineries pick up a little bit of a pace there here, increasing to around about 88.4%. So we did see demand pick up a little bit there for the oil. But ultimately here, if you take a look at the economic data that's been coming out here, Asia, take a look at here in Europe, as well as the States here, still seems to be very questionable, and I think on the weaker side. And if you look at the equities market, S&P 500, which I've mentioned in some of these prior posts here, starting to lose a little bit of momentum, and we're seeing more follow through with that. So I think that's certainly what's helping keep oil prices in check and preventing them from basically going on a little bit of an upside rally. Now you look at the short-term technical indicators, which were in overbought area. They started to kind of move down here into slightly oversold territory, but the recent price action kind of coming back up here has kind of put it in a neutral area, in my opinion. So I think ultimately what traders should be looking for is still weaker oil prices. I'm targeting down around the $89.5 to $90 area. I think that's what traders want to keep an eye on it here. If we start to really see significant upside pressure and get several closes above the 200-day moving average, we might be in store to see prices move on up a little bit. But otherwise, I think the inventory data, the supply and demand picture speaks for itself. So give me a call, shoot me an email here. We are looking at some new trades here, take advantage of the market to the downside. If you're still a bull in the market, give me a call. I can help you with some risk management strategies and talk to you a little bit more about that. And of course, keep in mind that futures trading does involve a substantial amount of risk, may not be suitable for all traders. Good luck and good trading.